Hello everybody, this is Kavita Agrawal and today we are here to talk about this week's market activity in our Market Outlook series presented to you by EXP-Invest. So right now we are going to, so today's Friday, the week's almost come to an end, and the objective of today's session is, like I said, to discuss what has happened through the week. Sorry, just give me a second, some technical issue. It's been happening a lot lately. All right, let me just try to fix that. Okay. All right, never mind. Sorry about the interruption. So quickly now I'm going to share my screen, and how we are going to continue with this session is simple. How we are going to continue with this session is, first we will discuss Nifty, then we'll discuss Bank Nifty, then we'll move on to the discussion of the intersector relative chart, and at the end of the session I'm going to help you out with your stock queries. So without much delay, let's get started with Nifty analysis. Okay. All right, so now you can see my screen, and I'm going to pull out for you the Nifty chart. So like every week, we're going to start with the 3-minute time frame to first gauge what has unfolded this week so far. So what we see that from Monday, that is this is where Monday started. We can see the price has consistently moved up, but not very linearly. In fact, there has been a lot of volatility, lots of ups and lots of downs. Okay, so the up move that has happened, it has been pretty slow, less than a percentage. Well, technically a percentage in a week is quite big, but if you compare that with the momentum that we had seen between 26th of June to 7th of June, it is significantly slower. Now what happens when a index or a stock starts losing momentum? Negative divergences form. So this is the 3-minute chart, right? Let's move on to the 15-minute time frame, and on the 15-minute time frame we can see a big negative divergence has indeed formed. So when a negative divergence forms on the chart, it can mean one of two things. Either all right, not sure if this is getting broadcasted properly. Looks like it is. If you can hear me, I would love for you to give me a confirmation in the chat, because I keep getting a pop-up about some error here. All right, so far so good. Okay, so like I was saying, when a negative divergence occurs, it can mean one of two things. Either the uptrend or the downtrend is coming to a halt, or a reversal is about to happen. At this point of time, it is difficult to say whether we are going to go into a bearish trend, but because of the occurrence of this divergence, we can sense that the uptrend is not as strong as it was in the past. Now, what would it take for the uptrend to continue, or rather convince us that it's still in a strong momentum? So I see there is a resistance at the level of 19,760. Now this 19,760 resistance level coincides with the presence of a blue trend line, as you can see on the chart. Now this blue trend line, we've now moved to the daily time frame. Let me also make sure that this shows up on the daily time frame as well. Okay, what is this blue trend line? let's remove that. Okay. We're just gonna clone this trend line and bring it down here. Yeah. So this blue trend line coincides with the 19,760 level, which is the seeming next resistance for the index. So on the 75-minute time frame also, if you see, you will be able to notice a negative divergence forming. So we have negative divergence coming in from the 15-minute time frame and the 75-minute time frame already. Still no reason to believe that the trend is going to reverse. The trend does look like it is halting. So what is the key support that you should look out for, especially if you're a swing trader or long-term trader and you're wondering whether you should keep holding your investments or you should exit your positions? What should you do? So here, if you see, the momentum was pretty strong up to 19,310. Beyond that, the momentum has started to slow down. So this becomes the natural first support, 19,300 roughly. And next key support is 19,200. So this entire range of 200 to 300 becomes important support for the index. And as long as the index is above it, it looks like there is some consolidation or some rest going on in the market. So what should you do with your broader positions? Like, because of this broad analysis, how should you go forward with your active positions? I would not suggest prematurely booking your profits. Instead, you could trail your active positions with a stop loss, and for new positions, be very, very cautious, be very stock specific, and make sure that the risk reward ratio is attractive enough for you to risk your capital there. Taking a quick look at the daily time frame, the daily time frame looks very positive, which is very, very bullish, which is very positive because there is no sign of negative divergence. The trend is really strong. It is above 60, RSI is above 60 and quite stable as well. So this loss of momentum that we might be experiencing it looks more like a hiccup. In fact, when we look at the daily or even the 75-minute time frame, it somewhat looks like the formation of a flag pattern, though in the flag pattern, if you know, it is the consolidation phase is expected to be a little bit on the downward sloping side, but here we don't see that yet. So not a very perfect formation. However, I would expect at least 19,760 to get achieved within the period of this rally. Let's also take a look at the weekly time frame and see if there is any activity or any indication. Not much, nothing different, except for the fact that the last 3 bullish candles have been delivering higher and higher volumes each week, which is positive. With that, let's move on to the Bank Nifty chart and see what is going on. Okay. So again, with the Bank Nifty also, let's start with the 3-minute time frame. And on this 3-minute time frame, as I can see, Bank Nifty has not been moving at the same pace as Nifty has been. What do I mean by that? So if you see, Bank Nifty has corrected nearly 2.2%, which is a slightly bigger correction than we've seen in Nifty over the same time frame, right? But one thing very clearly noticeable on the Bank Nifty is this positive divergence, which is developing on the 3-minute time frame, which is also developing on the 15-minute time frame, and as well as on, okay, not on the 75-minute time frame. However, on the 75-minute time frame, there is one very interesting observation to be made. The price is taking support at the green line, which is nothing but our 100 EMA here. Now this green line is the 100 EMA, and why I think this support is going to sustain, the reason for that is the last time Bank Nifty took support, it took support at the 200 EMA. And what I've seen is during bullish trends, when the prices keep going up and once they've taken support at the 200 EMA, they'll go back up. When they take some correction, come back down, they usually tend not to break the 100 EMA, they go back up, and then next time when they come down, they take support at the 50 EMA, and then they really accelerate and go up higher and higher. So if you've seen, there is a concept of accelerated trend where we draw the trend line, but the price keeps moving more in this fashion, and then it will keep going up and up and up. So on the bank Nifty chart also, that is the reason, that price behavior is so commonly observed that it is fair to expect it after a correction. And as a result of that, the 100 EMA support on the 75-minute time frame, I feel, is a key support level currently. Now, talking about the daily time frame, again, the daily time frame also tells us that the underlying trend is quite bullish, quite stable and strong. The weekly time frame suggests the same. However, the volume this week has not been as good as the last week. However, last week volume was extraordinarily strong on the bank Nifty. So with that, now let's move on to our intersector chart analysis. So the purpose of the intersector chart analysis that we do every week is to basically gauge which sectors leading, which sectors losing, and then we sometimes also go into individual sectoral charts. In order to be successful in swing trading or long-term trading, it's very important to know which are the sectors coming into favor, which are the sectors going out of favor. So if you know, I am predominantly a swing trader, and I also suggest my members swing trades through my Telegram channels. And as a SEBI registered analyst, I do it very methodical, with a lot of system, and there is strong methodology behind all of it. Now, it's always better to keep trailing your stop losses in sectors which have given strong rally, exit them when those trailing stop losses are executed, and then allocate your capital to fresh stocks in those sectors where the rally is seemingly coming up. So we've been churning our money between our capital between banking stocks, metal stocks, auto stocks, realty stocks, and of course IT stocks and pharmaceutical stocks mostly. Now this week, just as we moved our allocations to the IT sector, we can see a massive rally coming in here. Last week, we've already gotten out of banks after booking massive profits there. And auto sector, pharma sector, realty sector, these three have also been part of the active positions for us. And this week, what we can see is, especially today, we can see massive rally unfolding in the whole IT sector. I believe this is being backed by the rally which is also being seen in the US markets. Metal index is not far behind with 2.5% gains. The media sector is also coming out pretty strongly. The media sector has been doing this thing where it moves up really strongly on 1 or 2 days in the week, and then it starts showing up as one of the losers, and then it starts showing up as one of the winners again. So I've been looking for opportunities in the media sectors, but because it is so very, very volatile, I have been I've been very cautious in that space. Now, metal sector, however, has been giving very good indications. Tata Steel, Jindal Steel, JSW Steel, when they turned around for a possible swing trade, the indications that were given on the chart were very neat, very easy to pick up, and that is why the recommendation was given, and then wonderful profits were booked in a short period of time. Now let's quickly take a look at the CNX metal index, and let's find out if we are expecting such a rally to continue or not, or whether you should go ahead and make fresh positions at this point or not. So as you can see on the chart, the rally is already behind us. There is, like, our motto at EXP-Invest is always to participate in stocks or get into stocks, buy stocks before the rally, not after the rally. So metal sector is pretty much at a stage where we can say it is after the rally. So we initiated positions in the last week of June, that is this entire area, and now we've been booking our profits using trailing stop losses. So for metal sectors, I would suggest you to stay away. Let's also take a quick look at the CNX IT chart and see whether it is a fresh breakout or is it an exhaustion rally. Okay, so the rally is very strong. It is not seemingly close to exhaustion, and it looks like it can sustain itself. So should you go ahead and take positions in IT stocks? So just before the session, I was actually studying IT stocks. And what I honestly think is that IT sectors are right now great to pick up for your long-term portfolios. For the short-term portfolios, maybe not so much, because a lot of rally has come. Like Infosys, for instance, is more than 3% up already. So not a very good idea to pick up IT stocks for short-term portfolio, but for long-term portfolio, they look very, very attractive at this point of time. Let's take a look at another one. Okay, let's take a look at the auto sector, because a lot of people have a lot of questions on the auto sector. Okay, so the auto sector rally has been very sustainable, strong uptrend, but a small negative divergence has emerged. And in fact, just yesterday on my Telegram channel, I posted for people, for the members, that they should be cautious of some of the stocks in the auto sector, especially stocks like Bajaj Auto, because some negative divergences started to form. Bajaj Auto, Maruti, be a little cautious there. If you're holding positions, make sure you have your trailing stop losses open. And if you would like to join my Telegram channel, you're welcome to do that. It's a completely free channel. So I'm going to share this link for you in the chat box, and all you have to do is click it to get redirected and get added to the channel. So I have just posted the link in the chat for all of you all to check it out. All right. So that was the intersector analysis. Now I'm going to move back to the charts and help you out with your stock queries. All right. So Anshu has a question about Aptech. Medium term. For medium term. Aptech has given a massive drop today, and when a stock gives such a volatile move, it is not advisable to purchase them immediately. So I would not recommend that. And see, this big drop that has happened, it was so there is, I can see there is formation of this negative divergence already on the 75-minute time frame, which could have acted as an early indicator that the trend is not very stable. Again, even the 15-minute time frame did give a pretty clear-cut negative divergence. So this is the moment when the RSI peaked out, and here when the price actually peaked, and even the next peak. So in the very next peak, even though you can see the price is still much higher than the previous peaks, the RSI is already gone down below 60. So RSI, when the RSI goes below 60 on any stock or any index, it's very important to observe what is the position of the concurrent price peaks versus the RSI peaks, because that tells us a lot about the strength of the momentum and the direction, future direction that the stock is or the index is going to take. So from the chart of Aptech, it looks like it does not look good. Here I can also see on the 75-minute time frame, it did give the impression of taking support at it, but then it broke this level. So anybody who had taken position, if they had used a stop loss, they would have been saved. If not, then today they're probably facing, oh, okay, so this is basically actually a split. Okay, no wonder it didn't make any sense on the chart. So this is a split and the chart is not adjusted yet. So I would suggest you connect back, or you join my Telegram channel and ask me about the stock next week. Usually on the day of this split, the stock does not adjust immediately. So like I said, it does look like the stock was taking strong support at the 200 EMA. Once the stock has adjusted for this split, then we'll be able to analyze it better. All right, so we have a query on JK Tyre for 3 to 6 months. All right, the trend in JK Tyre is extremely strong, and I think JK Tyre is one of the stocks which I did cover in one of the past series on the behest of one of our guests. Don't remember the exact level or the time when we agreed, but even then I had reflected that it looks pretty strong. And this trend that we have seen unfolding is absolutely wonderful. Now, should you take a fresh position at this point of time? I would say yes, you can take a fresh position despite of such a strong rally. And if you've been seeing my sessions, you know I never recommend a long in a stock after it has rallied. However, JK Tyre stock is giving a very clear indication that the uptrend is still in place and there is still steam left. And I'm telling you this on the basis of what I'm seeing on the momentum indicator, combining different time frames, moving average behavior, support, resistances, and everything. So if you wish to make a fresh position or if you have a long position, either way, I would suggest that you maintain a stop loss at the level of 241.5, no higher than that, because then you might get whipped out. And on the target side, okay, so for the target, what I'm going to do is I'm going to quickly draw some trend lines on the chart. So that's our maiden trend line, and let's start cloning that in order to get other key levels. So it's a really beautiful chart, very, very clear price movements, very intentional price movements. All right, so we can see that the stock has a massive uptrend, and I don't see any reason why it would not revisit its previous trend line. So the first target for me on JK Tyre would be at 320, and the second target would be around 370. Like I said, the stop loss for the short-term position should be 241, but if you are holding a longer-term position, then I would suggest that you maintain a stop loss under the 100 EMA of 75-minute time frame, which would be slightly below 227. Okay. So that's JK Tyre for you. If you enjoyed this analysis, please don't forget to leave a comment and give a thumbs up to this live stream. Okay, so Purushottam ji is asking what is the news for Maruti. I don't know what the news is for Maruti. I can tell you what the analysis is for Maruti's chart. Okay. So like I said, there are negative divergences building up on the charts of Maruti, and because of that, I am no longer comfortable holding on to a long position. So I can see negative divergences building up on daily, 75 and 15-minute time frame. So if you have a long position, I would suggest that you get out of it while you are still in the profit. And if you want to make a fresh long position, then I would suggest you not to do it right now. Dilip Singh ji, he's asking about HLE glass. He bought it at 680. What could be the possible target that he could hold it for HLE glass? All right, let's see. I don't like this chart. I don't like this. Okay. Okay, see, first of all, HLE glass is in a strong downtrend. All right. Now, even in the strong downtrend, it is giving the expression that it is coming up. It's given approximately a 50% rally in just the last 3 months. And that is obviously a good reason for a lot of retail traders to get attracted to the stock. But is it a good idea to invest your money in the stock right now? I would say no. Because see, the stock has just come above the 200 EMA on the daily time frame, but I have strong reasons to believe it is not going to sustain, and if it does not sustain, it's going to fall down. Honestly, in the stock market right now, there are much better opportunities than this stock, so I would suggest don't risk your capital unnecessarily. If you want well-vetted stock ideas with strong fundamental backing and the correct technical timing with follow-up analysis, I would suggest you join my Telegram channel, and over there I can tell you about some services which could do you good. See, the stock market is really risky. It's so dynamic. There are no constants there, and when everything can change, it's very difficult to stay the course. That is why taking the help of an expert, of a SEBI registered research analyst like me, can be the difference between the success of your portfolio or the failure of it. So that's that. All right, moving on. Nita Gelatin 280 shares. So we have Rajesh G. He's asking about Nita Gelatin India. All right. Honestly, I'm analyzing this stock for the first time, and this is the reason why I really enjoy doing these analysis for all the viewers during the live session, because through your inquiries, I get introduced to a lot of many new stocks. It helps me learn more about uh, the different stocks out there. But yeah, sometimes there are very, very weird stocks also which are asked to be analyzed. However, I always, as a technical analyst, I always do my best to provide the best research for you. Okay, so now I have drawn the trend lines, and what I can see is the stock has clearly given a strong rally in the past few years. Now, should we expect this rally to continue? I am not so sure about that. See, because the trend lines I have drawn, the stock is currently moving in an upward sloping channel. Okay. On closer inspection, what we can see is the stock has already reached the highest resistance of this channel. Now at this point of time, if you want to make a fresh position, I would suggest be patient and wait for a strong breakout with strong volumes above the level of 1100. My analysis says that it is very unlikely to happen for two reasons. Firstly, huge negative divergence on the daily time frame. So a price still at the all-time high but showing such a big negative divergence is a huge red flag. Second, and the more compelling reason, is the volume profile. You can see this is the volume here, and the volume has been declining as the stock has been rising lately. Not a good sign. So if you have an active position here, even if it's a long-term position, I will strongly urge you to book your profits. And if you are considering to make a position, then I would say that you've dodged a bullet. Don't go ahead with it right now. Okay, now we have Shailendra Ji, and he's asking about SBIN, that is SBI Bank. Okay, again, short-term prospects not very, very attractive. If you have an active position, well, your stop loss should already have been triggered, and you should have probably been out. I think the stock can give a little bit more correction here. I would want to see the stock at least go down to 570 level before any short-term activity. And even from a long-term perspective, SBIN is not looking like the best bet out there, so I would suggest you not to go for it. There are a lot more better opportunities available even for long-term investments. All right, moving on. Umesh Ji has given me a compliment. Thank you, Umesh Ji. So Haas is asking about Tata Elxsi. Finally, somebody picked up the stock to ask. So Tata Elxsi, like I said, the IT sector is in a strong uptrend right now, and despite of the strong momentum, it looks like it is going to continue. The uptrend is going to continue, and on Tata Elxsi especially, what I can see that it bottomed out pretty much here, and the indication of the bottom out is textbook quality. I mean, I have rarely seen such a clean bottom out on any stock. As you can see, there was a strong positive divergence. The stock took near perfect support at the 500 EMA of the daily time frame here, this gray line, and it has started to move up, formed a higher high, gave a small correction. At the end of the correction, gave another positive divergence on the 15-minute time frame, started to move up again. So if you want to make a fresh position right now, what you should do is you should maintain a stop loss at the level of 7,500 or 7,600 and continue to hold. I think the stock is in a good position to rally all the way up to and beyond 12,000 most likely. Okay. So, but however, for that, it will obviously take time. It will take months, but I think Tata Elxsi is a very, very good stock, and the correction that it gave in The last few months, in the last 1 year was a very good time to pick up this stock for your long-term portfolios. That is what I have done, and that is what I would suggest you to do. It is still not too late. All right, let's see. So we have a query on Hindalco. Okay, strong uptrend unfolding here. Okay, we can see some gap up opening today. The volumes are picking up strongly. Let's see, again another cyclical metal stock. Okay. So see, Hindalco does look good, but I would suggest you wait for some correction before you make a fresh entry. If you have an active position right now, please maintain a stop loss not higher than 433, because you might get whipped out. And if you want to make a fresh position, I think the stock might retest somewhere around, so 433, actually not even 433, make it 432. So 432 should be a stop loss, and as the stock comes a little bit lower to maybe 440, 435 level, that would be a good time to maybe make a fresh entry. But again, I will say there are much better opportunities available out there than Hindalco. And if you're at if you're at a loss, then join my Telegram channel and I can help you out with that. Okay, Kalyan Jewelers for Praveen Khatri. All right, so Kalyan Jewelers is again in a very strong uptrend, and what I would say is the uptrend is looking pretty strong. It looks like it can continue. The momentum is strong. The volume profile is gaining and gaining and gaining despite of the prices going up. So the stock is actually been in an uptrend since the 13th of June 22. From then to now, it has already gone to X and is expected to keep going up. Right now, it is very hard for me to give you a specific target on the stock. So what I would suggest is, if you make a long position, keep trailing your stop loss. So Ritik Gupta is asking about M&M. Okay, strong underlying momentum, volume profile good, 75-minute time frame indicating strength, 15-minute time frame indicating some correction, and I would expect the stock to come back down to retest this 200 EMA on the 75-minute time frame, and that is exactly where I would want to also take a long position, not before that, because you can see that the stock has been going one side for a long time. And if you take a look at the past price action of Mahindra and Mahindra, what it does is this: it goes up, comes down, goes up, comes down, goes up, comes down, down, up. So this entire thing is a correction. Here it went up, it came a little bit down. Now it's been going up and it's not come down for a long time. So basis a 15-minute time frame, I can see that there is potential for it to come and retest the 200 EMA of the 75-minute time frame, and that is where I would potentially suggest an entry, if at all, in M&M. Okay. So with that, we've come to an end of our time for this session. Thank you so much for giving me your time, your attention, and joining the session. I hope I was able to add some value to you. If I did, please join my Telegram channel, show me some support, and in the channel itself, you can personally interact with me, ask your questions, so on and so forth. I will see you again on Monday with a new topic. On Monday, I'm going to be discussing about volume profile and how to use the change in volume to make better trading decisions. The session will be at 5 p.m. and I will be giving the intimation on the Telegram channel 10 minutes before I come live. So with that, I will take your leave now. Namaste.